Hi everyone, I hope you're doing well. Today we are going to talk about Bitcoin, the most popular cryptocurrency that a lot of people are recently talking about. So if you look at the price chart on the left, one Bitcoin as of the time of the recording is 58,000 US dollar, and the price has appreciated 847% in the last 1 year. And that's probably one of the main reasons why a lot of people jumping in the Bitcoin train. But should you invest in Bitcoin? So in this video, I'm going to talk about my own analysis in deciding for myself if I should invest or not. And so this is not a financial recommendation, just for informational purpose. So before you invest, it's good to understand what you're investing in. So what is Bitcoin and how does it work? And then in helping you to decide for yourself, it's always good to see what are the pros and cons in investing in Bitcoin. And should you decide to buy, how you can buy it and how much you should allocate in your portfolio. And lastly, what are the common mistakes that you should avoid. To understand how Bitcoin works, it's good to contrast it with transactions using fiat currency like US dollar or euro. Let's say someone in the United States wants to send money to another person in China. The money will go through a trusted third party, which is typically a bank, which will then forward it to the recipient. This process can take a few days, and there can be processing fee or currency exchange fee. With Bitcoin, transaction can happen without a trusted third party. It works as a purely peer-to-peer electronic currency. This means that payments are sent directly from one person to another, or in other words, from one Bitcoin address to a target address. It's fascinating how the technology works behind the scene. There are a lot of videos out there which discuss this in more detail. In a simplified way, think of computers all over the world use mathematical functions to independently verify all Bitcoin transactions. These transactions are added to a public permanent list of records called the blockchain. The blockchain is stored on all of those computers and works as secure, universal records of who owns what. Because it doesn't require a trusted third party to operate, it can process transactions much faster, let's say 3 to 7 transactions per second. So Bitcoin is a global peer-to-peer currency that is designed for the internet. It's modeled after gold and behaves like cash online, and it can be used by anyone. And it has no central authority which control or issue Bitcoin. And there's a hard cap of 21 million Bitcoins that can be created or minted between now and the year of 2140. And what are they worth? Just like fiat currency, they are worth what we think they are. So it's based on supply and demand. So when the first Bitcoin exchange went online, the price per Bitcoin was about 5 cents US dollar. And today it has grown into 58,000 at the time of recording. How do you get Bitcoin? There are currently 4 methods acquiring Bitcoin: through mining, which require a large investment because you need powerful computer that can solve a complex mathematical problem. The other one, which is typically used today, is wiring money to a Bitcoin exchange, which allow you to buy Bitcoin. The other way, of course, you can buy from the individual directly or sell item for Bitcoin. So where do you store it? Bitcoin are stored in what are called wallets. A wallet is randomly generated string of characters that consists of two parts, the public key and private key, allowing you to access it. So there are different type of wallet. Typically we use online wallet service provided by Bitcoin exchange like Coinbase. All that required from you is just for you to create and remember your password. But you can also have local wallet or offline wallet. So this wallet can be downloaded to your personal computer, or you can store it in your hard drive, but you just have to store this private key safely, but you also still carry the risk of physical theft. With online Bitcoin wallet service, you basically is constrained by the security provided by the service provider. So do I have to buy whole Bitcoin? Of course not. You can buy 0.001 Bitcoin, or with the current price as little as $58. Moving on, what are the reasons for investing in Bitcoin? The first argument is Bitcoin can store value better than gold in the long term, and that's why some uses it as a hedge against inflation. Unlike government-issued currency, where more and more money could be printed more recently with the stimulus, the value of our money actually decreases over time with more getting added into the circulation. Bitcoin, however, is programmed to have a finite supply, 21 million coins. With more acceptance and more demand, it could grow even more in value. This is one of the reasons why some public companies have converted their cash balance in Bitcoin. You probably have heard that Tesla invests 1.5 billion in Bitcoin, and similarly, MicroStrategy even have more than 4 million in Bitcoins. There are other companies like Square, which has significant amount as well, and this has worked so far for them because the price has appreciated since they bought them. So JP Morgan also reported in the last 3 months more retail investors like ourselves buy large quantity of Bitcoin through PayPal and Square, and more payment provider like MasterCard accept Bitcoin because it has a growing demand. You can even buy Bitcoin through Apple Pay. The other argument supporting Bitcoin is it could become a medium of exchange that's widely accepted, and when that happens, the value of Bitcoin will only grow higher. So I like this chart shared by a guy called Murad in Twitter to evaluate the evolution of Bitcoin. So on the left is market cap, which is the total value of number of coins times the current price, which is more than $1 trillion today. So over time, Bitcoin go through different stages and could increase in value if it can fulfill some of the criteria to become more widely accepted. So initially, it's just a digital collectible that people mine and plan to buy and hold. It's more speculative, but over time, there are greater perceived of safety or reliability because it has been proven to be hard to be changed, and people has accepted it more, and it is perceived to have better reliability, greater trust. That's why so far it has worked as a reliable store of value. And based on an analyst's opinion from ARK Invest, we are here today. But only time can tell if it could stabilize and get accepted even further to be a widespread medium of exchange that is accepted globally. And when that happens, you can see that the market cap and the price of Bitcoin would significantly appreciate. So what are the different sides of the coins? One of the arguments against investing in Bitcoin is it's very volatile. This means that you have to accept that the value of your investment may go up or down quickly before Bitcoin price stabilizes, which probably wouldn't happen anytime soon. So if you take a look at the chart here, Bitcoin from the all-time high in 2017 dropped significantly in a short time, more than 60% here, and over time it has dropped more than 80% at one point. But then, like in the last 1 year, it has appreciated more than 847%. But even so, you can see here there is a significant drop along the way. So there's also little to no regulation from government. This is not considered illegal per se, but announcement like this, like India recently planned to propose cryptocurrency ban and penalize miners, can quickly affect Bitcoin price. When the time it was announced, the Bitcoin price dropped from all-time high 61,000 to 54, but it has recovered some of the losses. U.S. Treasury Secretary Janet Yellen also has negative opinion on Bitcoin because she sees it as a highly speculative asset and believe that transaction mechanism is inefficient. She also has concern on the energy usage required to mine Bitcoin that Bill Gates also shared. The energy required to mine Bitcoin would only increase over time as the mathematical problem that you need to solve in order to mine Bitcoin would only become more complex. And hence, one would need more powerful computers and they need to run longer. The other thing is, Bitcoin is a non-productive asset. That's why Warren Buffett, which is arguably one of the most prominent investors, is against Bitcoin, just because he typically like to invest if there's a company behind it which produce service or product which would only grow in value, like a stock investment. But there's no such thing for Bitcoin. And Bitcoin price is affected by how widely accepted it is and based on the supply and demand. So if you have made it this far into the video and if you think the video is useful, consider to like and subscribe to this channel because that would help others finding this content easier. So back to the topic, should you invest in Bitcoin? Well, I have decided to invest a small amount in Bitcoin a few months ago. I still think it's a speculative asset, but I like the fact that more institutions and public companies have invested in Bitcoin now. The risk is still significant. That's why I've only allocated 1.5% of my portfolio in Bitcoin, which has grown into 3% so far. But at this point, I don't plan to allocate more, but I'm excited to follow where it goes from here. Yeah, so if you plan to buy Bitcoin, there are a couple of Bitcoin exchange service that you could use. I have used eToro and Revolut personally. eToro fee is relatively low, 0.75% per transaction. So remember, you pay this fee when you buy and when you sell. So you have to take that into account. Revolut is substantially higher. If you have a regular membership, you pay 2.5% per transaction. But if you have the premium one, you pay 1.5%. And the other two Bitcoin exchanges are quite popular, Coinbase and Gemini. So if I plan to add more, I will probably consider using them. So before investing in anything, we should remind ourselves some of the common investing mistakes, and this applies not only for Bitcoin. So first, don't invest just because of fear of missing out. We have to understand what we are investing in. So this video is a good start, but we have only talked about Bitcoin on a high level, so it's always good to do more research before you decide to invest. And related to FOMO, people often invest in things because the price has appreciated substantially. And when you buy at an all-time high and subsequently the price drops, some might sell and in panic, and basically you just sell for a loss. So to help avoiding this, it's always good to dollar cost average. So depending on how much you allocate, it's always good to buy at multiple installment. For example, buy 25% at a time, and then if the price go lower, you can buy more, average down. That way, the total average cost that you spend to invest in Bitcoin could be lower. So given that Bitcoin is also highly volatile, you have to be patient and you have to have a realistic expectation, because things that go up quickly could go down as fast. So you need to be aware of that. So frequently jumping in and out is also not good because you could accumulate the transaction costs which limit your total profit, and also there might be tax implications. So depending on where you live, in Germany, where I live, I don't have to pay Bitcoin capital gain if I have hold it for at least 1 year. So that's also one of the reasons why I have considered investing in Bitcoin. So always remember to diversify. Bitcoin is a risky asset, so it's always good to have your investment in other instruments like stocks, index, or real estate. Just because the potential upside is quite high, you might be tempted to put more allocation, but when it goes down, then this other investment instrument could help to compensate. So avoid using leverage, especially if you're new to investing. Personally, I don't like investing using borrowed money anyway, and leverage will only multiply the potential loss in case the value of your investment go down. And one thing that we should always remember, only invest the amount of money that you could afford to lose. So only put the money that you don't need on the short term, and you don't want to invest using your mortgage or your children education, because that could significantly impact your life and you might be forced to sell. Yeah, that's something that I would like to avoid. So that's it for this video. Consider coming back to this channel next week. We plan to post investing related videos every Sunday. Until next time, and good luck with your investment.